Hello, welcome to Tiffany Teach Tuesday. Today I will be giving you some home purchasing tips. I missed you guys last week, but I'm back. So now that you have fixed your credit, got your pre approval, have an idea where you want to live, recruited you a broker to help you with this buying process, now you're looking for a home and you found the home that you want. What do you do next? Well, once you found the home, the first thing is finding a broker that knows the area, knows the pricing, knows how to negotiate for you. The broker works on your behalf. That's why it's best to get a broker that is not working for the seller and you, but strictly working for you, the buyer, because you need them to negotiate in your best interest. Now, once you find a property, you can negotiate the price. If it's a hot market, a seller's market, you may have to offer above market price. Now, I tell my clients, especially my clients who have the finances that can afford to do it, the best deals are the cleanest deals. Cash is king. So anybody that's buying property that's paying cash, they're more likely to win the bid over everyone. Cash deals close fast. We can close cash deals as fast as the attorney can get the title cleared on the seller side. So that helps a lot. The second way you can help to win the bid on the property is limiting your contingencies. Contingency upon inspection, contingency upon you selling your home. Those help you purchase the properties a lot faster as well, and likely help you to win the bid, even if it's a seller's market. So I tell my clients, do a clean bid. The amount of earnest money you put down. What is earnest money? Earnest money is good faith money. It's saying, hey, I'm willing to put down $2,000 of earnest money to let you know that I'm serious about purchasing this property. And if I decide not to purchase your property and go buy another property, you can have that $2,000. So the more you put down in earnest money, the more serious they see you as a buyer. Now, that's in the seller's market. If you're in a buyer's market, you can offer $500, $250. It doesn't matter. It's your price, what you want to offer. But the ones who offer more earnest money are what the buyer and the seller may see as a person that is committed to this sale, that they're not going to back out this deal. Now, you can get your earnest money back if after an during inspection period, you find some material defects that you all can't negotiate to fix, and you decide to move away from the property because the seller is not willing to make these changes so that you can purchase the property, give you credit for it, fix it, whatever the case may be. Another way you can get back your earnest money is if you can't get lending. So this is what happens. You put a contract on a property, and in the midst of the deal, you realize that you want to go buy a car, which messes up your lending. When that happens, then you can't buy the property because you no longer qualify for a loan. You typically can get your earnest money back. So those are some of the ways that you can get the earnest money back. I've had deals where the amount of work on my 203K loans, my rehab loans, the amount of work that is needed to get the property up to federal guidelines for the FHA loan exceeds their loan amount. So they have to cancel the deal, because you can't buy a property with that needs a lot of repairs and doesn't qualify for an FHA loan, and you don't have enough money to cover the repairs. They can't force you to buy it. So those are ways that you can get your earnest money back. So this is what a clean deal looks like that most likely will win a bid. They're asking you $50,000 for the purchase of the home. This is for one of the distressed properties. You come in with cash. You say you can close it in 10 days. You don't want to do any, you don't have any inspection contingencies. You're buying it as is, and you're putting $5,000 down of earnest money. The buyer is more likely, the seller is more likely to go with you. Then another alternative can be the house is $200,000. You put $5,000 of earnest money. You want to still have your inspection period. However, you're not asking for any assistance with the closing costs. That's an option. You have all the funds you need. So it just depends on how your broker will help you negotiate to write up the deal to help you win that transaction. Okay. So that's the negotiation part. You can also, again, have the seller negotiate the seller helping you with closing costs, and setting a quick closing date. Typically for a 203K loan, it takes 45 days. Typically for a residential is 30 days. However, sometimes if all your ducks are in a row, things are moving swell, you've been pre-approved, some lenders can close a deal in 21 days with a FHA conventional loan and a 203K loan in 30 days. It just depends on your lender. If you need more time, you can ask for extension. That does not mean that the seller has to agree to give you an extension to close this deal. They can say, no, we want to take it off the market, put it back on the market. You can have back your earnest money. We're not granting you an extension. So it's very important that once you have found your home, you have all of those documents that the lender requested in the beginning of the transaction to get the pre-approval. You have new copies of those documents to present to the lender to close the property in a timely fashion. Now, they accepted your offer. Now it's time for you to do, and you decide to do it. Even if you're buying it as is, I strongly suggest you do 2 types of inspections. The first one is a roof certification. I strongly suggest it because there's nothing like buying a property that you think is in great condition, even if it's distressed, and you find out that the roof is bad. That can help you in the negotiation period of the inspection period to negotiate a credit, the price down, or something of that nature. Get a roof inspection because a roof is costly, depending on if you need a complete tear off or not. So, and the roof is good for 20 to 25 years, maybe 30, depending on the type of roof you get. So you want to get a roof inspection and get a roof certification done. That's the first thing. When you're getting these inspections, make sure that they have access to everything in a home to be inspected. I have a good roof inspector. He doesn't even have to climb on the roof. He uses a drone to hover over the roof to look at the roof. That's even better because somebody climbing on top of the roof. In Chicago, we are inclement weather now. It's snowing. But on a day it's cold and windy and raining, you can't climb on the roof, but you need to have a roof inspection. But with the drone, he can see the roof if it's raining or if it's cold. He can't see if it snows on top of the roof. So it's better to buy when it's not inclement weather like snow. Get your roof inspection. That's even if you have a distressed property and you're doing a 203K loan, get a roof inspection. The next inspection, whether you're buying as is or not, 203K, is get a inspection and run a camera through the main drain line. You all don't understand how important that is because if you run a camera through the main drain line and you find tree branches in the drain line, tree roots, that fix can be anywhere from $10,000 to $15,000. So that $350 or $500 inspection of that drain line can save you $10,000 to $15,000. And it may be the difference between you buying the property or not. Drain lines, check them. Those 2 inspections are the most important, whether you're doing a distressed property, a cash only deal, take it as is, or 203K. If you're doing an inspection as a ready to move in property, you still do the roof inspection, the drain line inspection, and then the inspections of all the appliances that they're leaving, the outlets, the window shades, the windows, making sure all the windows function and operating, and all of those mechanisms in the home. Now, the typical inspector, you need to find out what they're offering in their inspection. Typically, a inspector doesn't offer a drain line inspection. They just turn on the water, make sure the water is running, and things of that sort. Now, if you're doing a 203K loan or a distressed property loan, you should not get yourself a traditional home inspector. The reason being, in these properties, typically there's no running water and there's no power. So what is the home inspector checking? Pretty much nothing. That's why you are going to get a roof inspection and a drain line inspection, and you can check the windows yourself. And that monies that you would have spent for a home inspection of $500, you could spend towards a drain line and the roof inspection for my 203 and distressed people that are buying. Now, if you are doing a 203K loan, you will get a 203K HUD consultant. Anything over, depending on each bank, $30,000 to $50,000, you have to have a consultant to do a draw for you. If it's less than that, you can do your own draws and pay out. However, that inspector walks through and tells you what is required by FHA to get the loan that has to be up to standards, what is recommended for you to do, and what your desires are. And they give you a report. They give you two reports. The first report is the report with all the numbers of calculating the cost of what it would take to make those repairs. Now, understand, a home inspector is not legally allowed to tell you the cost of making repairs on properties. So that's why for a 203K loan, you would not get a home inspector. You would get a roof certification and a drain line inspection, but you would get a 203K consultant because they can give you the cost to make these repairs to bring the property up to code by HUD. Now, so they're going to give you the required, recommended, and desired repairs. So that's what you would use for 203K consultant for. And you can also use that consultant if you were buying a property at distress, or you can bring in your contractor. It doesn't matter. But you need to get that. You definitely have to have a 203K consultant for a rehab project. Now, once you've done all that, got through your inspection period, you negotiate back and forth what they're going to give you credit for, what you're going to accept as is, you move forward with the purchasing. Now, before you can purchase and close on the property, the bank requires that you get homeowners insurance. That is to secure the property. That's if you're getting a loan. If you're paying cash, you don't have to get insurance, but I strongly recommend you, my investors, to get rehab insurance on your distressed properties. I had a property that had a new furnace system put in, and the furnace caught on fire. So you're at 50% through your project. You have now put half of your monies into the rehab, and the property catches on fire, and you do not have any rehab insurance. Guess what? You're going to take a L. You're going to lose. So protect your assets. Get you rehab insurance. 6 months policy. They do, some of them do 90-day policies, 6-month policies, 1-year policies, 18-month policies, just depending on the scope of work and how long you think it's going to take you to get it done. But if the bank is giving you money, they're going to require you to have homeowners insurance. And I recommend that you get replacement value insurance. That means whatever it costs to rebuild that home, be it tomorrow or 20 years later, the value of it will be, the monies will be given for the cost to repair it and bring it back to its original state. So, for example, your house catches on fire. You've been there for 5 years, and 5 years ago, grinding countertops cost $2,500 to put on your kitchen cabinet. Now you fast forward 5 years later and you want that same grinding countertop replaced, but now it costs $5,000. If you have the basic minimum homeowners insurance, they're going to give you depreciation value for the countertops, which means it's not even giving you $2,500. They may give you only $1,000. So now you're going to be getting laminate countertops instead of granite. Whereas with replacement value insurance, you'll get the cost for what it is to replace it with granite countertops. So get replacement value insurance, the cost to repair your property back to its original state, regardless of what the cost it is now, regardless of what you paid for it back then. In addition to that, you might want to get it on your personal contents. So my home caught on fire and I had replacement value insurance. So everything in my home was put back to, as a matter of fact, into a better state because I had enough monies to cover all the repairs. However, I didn't have replacement value insurance on my personal contents. What is considered personal contents? Stove, refrigerator, washer, dryer. Those light fixtures. So those contents were my clothes, trinkets, picture frames, all of those things were depreciated. So I got a depreciated value for that. So I hope that this helps someone in their home purchasing process. And next month, I'm going to do some tributes to Black history and talk about African Americans during the Black History Month, some of the things they went through, obstacles they went through to obtain home ownership in America. And also tell you how we have progressed and how we are able now to own and build our communities back up. So as usual, it's always a pleasure to be here to educate you. Thank you for tuning in, and I'll see you all next week, Tuesday. Have a nice day.